Hello, this is Benjamin. Welcome to my show. You are watching Benicarus Trades. This is my weekend edition for the trading week ending on December 8th, 2023. And it was again a very interesting week. The markets were basically up on a weekly basis as well. But let's dive into it in more detail. So let's check out what was going on in the news and of course what we had in store for the week. So on December 4th, which was Monday, basically we had some balance of trade in Germany and as well as factory orders in the United States. We had more unemployment and employment numbers. We had the interest rate decision in Canada. They stayed at the same level. We did have industrial production in Germany, initial jobless claims in the United States, and the unemployment rate as well in the United States, which was the biggest catalyst of the week, right next to another catalyst that was coming from AMD. The unemployment rate in the United States indicates that the job market is a little bit hotter than we thought the Fed might like. But as we have seen, the markets took it nicely. I guess a soft landing might be what the market is anticipating now. So therefore, good news might be good news again. We'll get into it a little bit more in detail later. And here we have it, the S&P 500 rises to 20-month high with a soft landing in sight. That's what CNBC is reporting. Can investors finally relax? And that's what I mean by either the markets are completely ignoring the hotter than expected job market, or maybe there's a trap going on to lure more people into investing into the markets, or maybe it is true and now, especially with the CPI numbers from November, it seems like good news are good news again, because it indicates a strong economy with inflation coming down is actually a good thing, and instead of a hard landing we might get a soft landing. So let's check out the sectors on a weekly performance. We do have communication services advancing quite a bit, as well as technology and consumer cyclicals. The end of the spectrum were energy, basic materials and consumer defensives, especially energy being down minus 3.2%, which indicates that inflation is going to come down even more. On the futures markets, we have wheat, cotton, euro stocks, DAX, cocoa all advancing a lot. And on the other hand, we do have silver, natural gas, oats, sugar, palladium, orange juice, crude oil, ethanol, and others coming down significantly. Overall, prices for commodities went down a lot more than they went up, so also indicating a little bit of a deflationary scenario. Here we have the individual stocks of the S&P 500 on a weekly basis as well. Of course, there is this time the big one, AMD, sticking out in the semiconductors sector. They reported that Meta and Microsoft committed to buying their new artificial intelligence chips, and that was such a great news that AMD was up a lot. Microsoft staying flat, as well as Amazon. Some other really good stocks this week were Apple, Google, Meta, all from the technology kind of sector. And energy, on the other hand, was coming down quite a bit, as well as basic materials. All right, let's check out the stocks on a weekly basis. We have the SPY advancing almost nothing, 0.17%. So we do see on a weekly basis, it feels like we are losing some steam, and which is still surprising that we are up. We still have a little bit to go to reach the highs of January 22. So let's see how much steam we have left. The same applies to the QQQ. We do have some, as we can see, the wick, we do have some buying momentum here. Also, we have topped our July 23 top, and also we have not reached the January 21 highs as of now. IWM as well, again a strong week, and also is the Dow Jones. I want to quickly pause here and want to explain what my thoughts are on the Dow Jones. So on the weekly basis, we have the Dow advancing just ever so slightly. It's basically flat, but it's also at the top of a Bollinger Band. And the way I see it is in combination with the stochastics, we are in an overbought territory. So I'd be a little bit more cautious here with the Dow Jones especially. And if we change to the daily view, yes, we do have a little bit of room left to hit the top of the Bollinger Band. So I could envision seeing the next candle going up even a little bit more, but we also have resistance going on here from January 22. So it wouldn't surprise me if it will pull back a little bit until we have confirmation that we are in a continuous upward movement on the weekly basis. All right, at the back of unemployment being lower than expected, we do have some interesting things to report from the TLT, which is the 20-year Treasury bond ETF. It did advance 1.5%, but it also had a massive sell-off on Friday. We can see it on the wick here. So it did basically price in either another rate hike, which is not really likely, or a later rate cut, which is more likely. And that's all at the back of the higher unemployment rate. So AMD did have a good catalyst indicating that their new AI chip will find buyers, especially from Microsoft and Meta. So it was going up by 6.2% on a weekly basis, which is just massive. And we are also hitting resistance of roughly $130. We did overshoot the Bollinger Band, and we are also somewhere between overbought and, well, basically maybe soon locked in. On the daily basis, we did overshoot already, so I could envision that some of the people might cash out on this massive trade of the last 3 trading days of last week. Let's check out what was Nvidia doing at the same time on the weekly basis. You can see it's coiling around here. I could see it coming down to the 400s, maybe one more time by the end of this month or next month. And my favorite stock actually is Intel. I am waiting for it to pull back a little bit more. I have missed my last opportunity, but I could see it also maybe moving up slowly but steadily. Broadcom reported quarterly results and they were positive for the most part, so we do have a candle coming up. Cisco on a doing nothing basis, hovering around down there. I'm gonna have a look at it for sure. It looks interesting to me. Then we have another one, which is Oracle. Oracle having a negative week. Also, I wanted to get into this, but I have missed it ever so slightly. Meta is also interesting. It almost hit the 18-day moving average and bounced back up. I believe that there is a lot of room left for Meta, even though let's see how next year is going to be. If we should see a recession as everyone hopes for, then maybe more advertising spending is going to be cut, which is going to affect Meta, of course, as well. Apple was on a move this week, going up by 2.3%. A stock of this size moving this much is not something you see every day. It is soon maybe to be hit the 200 level, which would be really interesting, because breaking out from that level, it might go up even more. Let's check out Tesla. Tesla isn't doing much as of late, which is alright. We all know that Tesla likes to coil and then explosively goes in one direction or another. I believe the 240 support and resistance area has been validated many times. It's right in the middle of the Bollinger Band, so it could go either way on a weekly basis. They did deliver their Cybertruck, which some people believe is a game changer and some other people believe is like a nothing burger, basically. Something that I like to cover is Southwest Airlines. Southwest Airlines was coming up quite a bit, 8.9% to be precise, and I'm really sad that I wasn't in this trade. Anyway, we will check it out even further, because basically we still have many resistance points to overcome. So let's check out some of the oil stocks like ExxonMobil, for instance. Of course, it was coming down a little bit more since oil price is now hovering at around $70 per barrel. I just wanted to mention that oil was coming down quite a bit, and I had a feeling it might bounce to the upside, and it did a little bit. Anyway, the energy stocks are still down quite a bit, such as Chevron, for instance. It's just basically coiling and doing nothing. So let's discuss what is in store for us for the next week. I could envision that the Fed meeting of 2023, the last one, is going to have a big impact. This might be a meeting where Jerome Powell is gonna clearly say that there are not going to be 4 rate cuts for the next year, which the markets have priced in which case the markets will maybe take it bearishly. Of course, if he talks softly, the markets might also use it to do either nothing at all or a rally and give us a Santa Claus rally to everyone who is still in the markets. So that's going to be next week's biggest thing, in my opinion. And this is all in an environment of a super extended period where the markets just went up. November of 2023 was one of the best months since 1950 for the markets. And parabolically moving upwards like this might be a little bit scary for some people who don't believe it will stay this way. If you do like this content, please make sure to like and subscribe to this video. If you want to support me even more, I am also doing a trading pit challenge. Should you check them out and decide to open an account with them, please make sure to use my referral link in the description. I'm also using the Tradesviz journaling software to journal my trades. In my opinion, super important. Doesn't matter if you're a pro or a newbie, really tracking what you have done and then reflecting on it is super important. And last but not least, of course, I have Interactive Brokers. Use my referral code if you choose to decide to open a demo account with them. I like their professionalism. They're really one of the biggest brokers. The fees are super low, no shenanigans with dynamic spreads and so on. So you're gonna trade real stocks, you have access to options, you have access to all the instruments the markets have to offer. Alright, that's it for today. Thanks for watching and I'll talk to you soon.